Really interesting spot. We don't have the NASDAQ, but the NASDAQ was making overnight lows. And we had said, Tom had said, watch these overnight lows. If they get rejected and they bounce in the NASDAQ, they could certainly rip the ES higher because the ES wasn't as weak in this sequence as the NASDAQ was. Two things happened. The NASDAQ did jump and kind of rejected that level. And then watch right in here what you see happen. You get a pink triangle. And a pink triangle, stop it, is showing at this moment in time in this area a bunch of sellers who want to sell it were much higher than the buyers who want to buy it. Not the sellers who sell it, not the buyers who buy it, those who want to do it. Price is what you have to watch its reaction because what are we trying to do as traders? We're trying to predict price. So you better know price. You better know its characteristics. You better know when it's lying to you. You better know when it's telling the truth. All giving you a better idea and a higher probability to predict what it's going to do next. What does price do when it gets this imbalance of selling versus buying? Does it shoot lower? Does it get afraid? Or does it jump right back into the area where the imbalance was? And it jumps right back into the area where the imbalance was. It wasn't scared. And the metaphor that I keep saying is if you're walking down the street or down a dark alley, your price, someone jumps out to scare you, to rob you, what's your reaction? Your price and the guy jumping out is, for example, this sell imbalance. Some people run the other way. Some people would freeze and succumb to the robbery, whatever. But to predict what that person's going to do next, it's important to know what he does at the moment. The guy yells, boo. Now, I'm not saying most people who rob you say boo first, but you get the point. So when you use that in conjunction with the correlation of the NASDAQ, you got something. This isn't a surprise. You don't have to be long for it, but you're probably not short for it and getting stuck. And you could see it rally quite nicely. Now I'm going to fast forward to a moment, and I want to say this again because 8082 was in a big area today on this particular session. If you're watching this in the future, this day had a big, strong number for stock indexes, and we rally 25, 30 points. That's a big rally. But we come back within an hour and test it. Then we come back about 30 minutes later and tap on that area again. It was 8082 right in here. And before this, I had said you got to be careful trying to use that price as a support to get long and fade it to go back up. Why? Because the market is showing you it cannot stay strong, even though it got an incentive and it got data and it got the reason to get strong. It's not remaining strong. That's a clue. That's understanding price a little bit better than you might have before this. Understand price didn't remain strong when it had the reason to remain strong. And next thing you know, it falls out of bed. And this was the beginning of a 30, 40 point break within a very short period of time. And so you could see a buy triangle come in and they quickly reject him. So let's replay that to say, well, where could I possibly get short? Well, first you have to have the idea, the bearish idea, that a market cannot stay strong on a very bullish number. And so just watch it in here. You could see, boom, that 350 imbalance comes in. How quick did it come back against them? Pretty damn quick. You got to be anticipating this stuff in order to react on it, to build up the idea, understand the story, and then know what to anticipate to predict with higher probability what's going to happen next. You're already bearish in this sequence because of ground zero, the price that the market was at before the bullish news came out. We call that ground zero. It's not arbitrary, and it means something. It already tested it twice. This is the third test of it. This is, I can't make people get short, but man, you better be careful trying to get long. And the market falls out of bed. And other moments of these buy triangles failing. You got to know what these triangles tell you in order to know how to use them, both on the sell side and the buy side. You really get, you can see 2 or 3 of them coming right in here, but you really can get yourself in the order flow rhythm when you're understanding how price is reacting to areas that are giving you new information. Giant weakness people have is reading the real time. So they don't know what to read. There's all these numbers coming in and out. And you got to distill down, how is price reacting to certain situations and scenarios that you might have not been aware of in the past. And that's a big part of reading order flow. Not just seeing orders come in and get filled, but seeing orders come in and not get filled, see imbalances of sell orders and buy orders. Because in order to find value, you got to compare it to something else. So I don't know if it's a lot of selling unless I can compare it to the amount of buying that's there. You have to be able to compare buying to selling in order to determine if there's a lot of one and not a lot of the other. And then how does price react to it? And that's what's important with pulling out the important details of a dome, of a footprint. And so it doesn't just seem like a bunch of numbers on a screen. There's not as much going on in this screen as you might think. And some of the marks on the screen with these red and green guys over here, there's not as much going on as you think because we kind of just have a better understanding of other people's positions. And then in the dome, the imbalances that exist and how price is reacting to those imbalances. Don't think for a second. Sell imbalance, sell it. It depends on price reaction to it, immediate reaction, and where you're at on the chart. Sometimes, yes. Sometimes, buy imbalance, sell it because it creeps below it. Or you get back to back sell imbalances, showing you the market when it matters is saying we want to sell this thing. We want to sell it. It's the operative word. Not we sold it, we want to sell it. People who want to do something but haven't influence price more because they're not shaking hands. A buyer and seller who agree and get filled, they shook hands. But sellers who didn't find a buyer yet are inclined to push price lower. So if they don't, that's a clue also. Make it easier for you to read the market, not harder.